Hey everyone, this is John Robinson from Blueprint. Today is Friday, April 28th, 2023, and this is the monthly asset allocation update video. We produced this video in conjunction with a longer form written piece that we call the co-founder's note, where this month we talk about human emotion, simple systems, and return chasing, and how all those three things combined can lead to bad outcomes or less good outcomes for clients. So if you haven't already read that, I would encourage you to go back and read that. In this video, we talk about the asset allocation changes that we're going to make going into the next month, in which case that's May 2023. So let's get right to that. So U.S. equities. There's a lot of changes happening in the portfolio this month, and really it's driven by U.S. equities. So for the past several months, very close to a year, in fact, we've had either minimal exposure or we've had a rising trend in the intermediate term, but no confirmation in the long term. Well, that's now changing. That's changed in April. So heading into May, we'll increase exposure to U.S. equities. And where that exposure will come from is short-term fixed income. If you're familiar with our handoff process, as a result of that process of rolling down risk by asset class, we've been parked and really camped out in ultra short-term duration fixed income and cash equivalents for several months. Well, as long as we've been in a downtrend in U.S. equities. And now we're just simply handing that exposure back to U.S. equities now that they confirmed not only the intermediate term trend upward, but the long-term trend as well. International equities. So really no change here to foreign developed equities. They remain very strong in an uptrend over both timeframes, and emerging market equities in a downtrend over both timeframes. Real estate remains in a downtrend over both timeframes. As I mentioned earlier, a lot of that exposure is getting pushed up to U.S. equities now that its trend has resumed on the upside. U.S. and international treasuries exposure will remain unchanged here. Underweight. We have a rising trend in the intermediate term, falling trends long term. So still seeing how that's going to play out from a trend perspective, but we'll do nothing as far as duration goes heading into May. Inflation protected bonds, no change there, remain underweight. Same situation with nominal bonds and international treasuries, is that we have it one time frame up, one time frame down. So we'll remain underweight there. Alternatives, gold. We still express gold, or are expressing gold right now as our alternatives allocation, and have been for some time. The trend in gold is rising over both timeframes. So we'll maintain our maximum allocation, which is our baseline allocation to gold. And as I mentioned earlier, short-term fixed income will go down, not because of any weakness, absolute or relative on its part, but because we're now pushing that back up to attempt to at least what have been historically higher expected return asset classes like U.S. equities, now that they're in a rising trend over the long run. So what does that look like? Well, on a graph, that looks like taking from short-term treasuries, that's the headline, and pushing to U.S. equities. So really the key takeaways. Number one, U.S. equity exposure will increase due to the reemergence of a long-term uptrend. The Blueprint portfolios will increase equity exposure to baseline, and in some cases slightly above baseline, going overweight U.S. equities. And as you'll see in our written piece, our takeaway this month is to keep it simple. Keep it simple, stupid is something that you hear the KISS method for almost any process. It's better to keep it simple. Einstein has a quote that you should keep all things as simple as possible, but no more simple. And we believe that at Blueprint, and our systems, our rules, our systematic investment process is really designed with that in mind, to make it as simple as possible with as few parameters as possible. And that fits markets, as we say, more like a mitten than a glove. We also write about the fact that the one thing that is predictable, because if you've listened to past videos or read past content, you'll know that we don't predict anything. We're reacting to what the market is doing. But if there is one thing that is predictable in investing, it's human nature. We believe that the reaction that humans are having right now relative to market movements is the same reaction that they're likely to have 25 years, 50 years, 150 years from now. And that is driven a lot by the emotions of fear, greed, envy, and the like. And that makes humans do odd things sometimes and make odd decisions in markets, which is why we are systematic in our approach. And one of those things that we observe as money managers and as systems designers and implementers is return chasing. And if you think about 2021, which was driven by growth, which was driven by commodities, which was driven by the beginning of this inflationary, transitive or not, this inflationary spike that we had, and cryptocurrencies to a large degree. And you move into 2022, and those asset classes, by and large, or segments of asset classes, have really, really bad years. And now you flip to 2023, and those are some of the best performing assets that we monitor here at Blueprint. And so for us, the message is not only to keep it simple, but have a process that's repeatable. And that's never going to be a shiny object. It's never going to be flashy. But what we think it does is it increases the probability that your client is going to meet their goals by having this repeatable, systematic process that doesn't attempt to predict anything and doesn't try to chase after returns. And we feel like that helping you help your clients, that is the best thing that we can do. Have a very disciplined approach that we execute as flawlessly as possible, month over month over month over month, and do that in an unemotional way. And so we always say that, you know, that our systematic process hasn't taken the emotion from us, but it has taken the emotion from the decision-making process. So as you think about telling that story, the simple, repeatable, lacking emotion and high in discipline story, you know, as we always ask, what can we do for you? You know, we're helping advisors tell that story nearly every day, whether that's jumping on calls with advisors and their clients, producing content pieces that help tell the story through an analogy or a metaphor that might be helpful. So if you have any ideas of how we could best serve you and therefore or thereby serve your clients, please let us know. My contact information is here on the screen. You can go to blueprintip.com or email me or call me directly or any one of our teammates here at Blueprint, and we'll jump right in and help you to the best of our ability. So with that, I hope your year has started off. We're a quarter and a month into the year. I hope it started off really well. And we look forward to seeing you back here at the end of May. Thank you.